Welcome back, everyone, to Lamb's Cryptoverse. So today I'm going to do a deep dive on the Solana blockchain. The ticker is SOL, S-O-L. So before we start talking about Solana, I've got a lot to talk to you about. So just a few points. Number one, I'm not going to talk about everything in the project. What you could do is I wrote a lot of information down in bullet points. You can pause the video and then print out the data, read the data on your own, because there's just so much to talk about. And the second thing I want to tell you about is this is a deep dive, but I do have another video that just focuses only on the recent innovations in Solana. So let's get started because I have a lot to talk about, as I said. Again, this is a deep dive, and one thing I just want to talk to you about is I use a holistic approach. Some may argue with me, why are you saying tokenomics is so good when they have high inflation or they have a lot of a whale risk? What I do is I put everything together. I look at it holistically. So I look at all the factors within each factor, and then I make a rating. The same thing with the whole project. I look at everything together, and then I get like a gut feeling, and that's how I rate the project. So let's get started. So today I'm going to be talking about the background and history of Solana. I'll do that quickly. We should all know about that. Remember, this is not financial advice. Two, I should have told you I have a rating scorecard for every large blockchain project out there. And so not only do I rate coins and projects individually, they're rated on a relative basis. So for example, it seems like Solana and most chains don't have that much activity, but like I said, most chains don't have that much activity. They're still early stage projects. So remember, I'm just rating on a relative basis. So if I was rating not on a relative basis, I might give a lower score for a lower total value locked, for example. In part three, I talk about some trends and the conclusion. And here I'm pointing to this, it looks like a blockchain trilemma. And this is the body, mind, and spirit, as they call in meditation. And I'm using the same type of thing. I'm looking at it, as I said earlier, holistically, all together. So the background of Solana. Solana is a monolithic, beta-staged, non-EVM, meaning non-Ethereum virtual machine, designed layer 1, L1, third generation, SCP, smart contract protocol, developed to enhance network scalability and performance through its novel proof of history technology. I know that's a big mouthful. So basically, this is a chain that was made to improve upon Ethereum. Founders. The soul, and I'm not talking about the ticker, the soul of Solana is Anatoly Yankovenko, who co-created the project while working at Qualcomm. He's a very friendly guy, knows a lot of people, not only within Qualcomm and within Solana, but he has a lot of friends that work for other projects. So he's a very good, I would say, manager. And so he basically formed this team, and a lot of them were his ex-colleagues at Qualcomm. And you can look at the white paper to find out more about it. So basically, he was trading stocks and whatnot. And he wanted to figure out a quicker way to trade on the same level as professionals. And there wasn't. There didn't exist a case. So what he did is he created a DeFi chain to disrupt Wall Street. That was the original use case. But now, to me, the new use case is a consumer use case. So he's onboarding consumers, and this is my opinion, that he's moving from DeFi to consumer. And here's the team. So the two people that you hear about the most are, as I said, Toli and Raj. There's also another guy that's a chief of strategy, and you see him on YouTube a lot. He's not in this slide over here. The foundation and corporation. So when you form a blockchain project, you've got the for-profit corporation, and then you've got the non-profit foundation that's headquartered in Switzerland. That's how it goes. So Ava, for example, Avalanche has Ava Labs in Brooklyn, New York, and Solana has Solana Labs in San Francisco. And you can read this on your own. So the backers, and this is pretty typical of backers. They had many seeds and funding rounds. And you can see multi-chain capital in the seed A. That was 2019. And then in the funding round of 2021, you could see the big honchos came in, like Alameda Research / FTX. And we know what happened with that. And of course, you've got A16Z, which is basically Mark Andreessen's and Horowitz's company. Here's my rating scorecard. There's a lot to talk about here. I'm going to do some deeper dives into this scorecard as we go along. So I'll talk about some of these quickly. The funding was excellent, but I lowered the rating because of what happened with FTX. Basically, when FTX went bust, Solana got basically punched below the belt. They basically got knocked out because they had a lot of the funding in Serum, which is the Dapp, and also FTT. So not only did the Solana project own FTX's coin and related coins, but FTX / Alameda owns Solana's coin, so they need to get rid of them now because of the bankruptcy. So it gets very incestuous. And let's go on because we could talk about this for hours. Management team is excellent. I mentioned that before. The technology, despite all the hacking that's going on, I still think technology is above average to excellent. The developers, and developer growth is excellent. User experience is excellent. The Solana wallet is very user-friendly. And they have a nice UX and a very good way of onboarding users. And besides that, they've recently introduced the Saga phone. And it's going to be yet another way of onboarding consumers in an easy way. So that's why the user experience UX is rated excellent. Use case, we saw a large decline in total value locked, and this is even before FTX. So that's no good. That's why the use case is average. But we're seeing a growing popularity for DPIN, which I'm going to talk about later, and NFTs. So that's why I rated average. It's like some pros and cons. So the pro obviously is DPIN / NFTs. The negatives or cons are the rapid decline in total value locked. And I'm going to show you a slide on that later. Decentralization. Okay, the SEC specifically pointed out that Solana is a security. But I think they just chose Solana because it's a very popular coin. Because when you look at decentralization, Solana to me is more decentralized than other projects. So I disagree with the SEC totally. It has a lot of validators. We're going to talk about this later, but the Nakamoto coefficient, which basically measures how many validators need to control a network, that is a pretty good number. We're around 31 going on towards 32. That's a pretty high number. So they have a good Nakamoto coefficient. They have diversity. There's a whole bunch of ways of looking at control and diversity. I'm going to go talk about that later, but Solana does a good job. Oh, here's one more way. I should read this one to you. If you read the second statement here on the decentralization, it says both Solana and liquid staking pools are pushing to onboard validators outside of the super minority of validators that comprise the Nakamoto coefficient. So Solana is very aware of the need to be decentralized. Next point, tokenomics is average. There's no maximum supply, which is a big negative. Superficially, it's a big negative. But then, and inflation is high. But I'm going to show you later on in the slides, there's also some big positives I could talk about when it comes to tokenomics. Next, social is excellent by any measurement. FTX, Alameda, this has been a huge body blow. And you can print this out and look at them yourself, because we can go on for an hour just on this point. There's been a lot of points here on how FTX, the bankruptcy and failure of FTX, just almost made Solana go bust. For example, the validators declined rapidly, which suggested that FTX controlled some of those validators. As I mentioned before, Alameda/FTX control, they own 45 million Solana tokens. So that's not a good thing, because when the bankruptcy reorganization is complete for FTX, those Solana coins will be sold. So basically the 45 million sold tokens, it's almost like a whale. What else should I focus on here? And there were rumors, this is point number 5, there were rumors that Solana developers were quitting, and that was not true. There was a mistake with the data that Token Terminal was looking at. And here's some truth. If you look at the point on Treasury, the funding level did decline due to the FTX bankruptcy. And several dApps, like Oxygen, which is a prime brokerage, and Maps.me, which is a mapping app, these dApps, I'm sure there was some more, were custodied and controlled by FTX. So that's a big body blow to the Solana ecosystem. So even if it didn't hit Solana directly, it hit them indirectly because it affected dApps that were on the Solana ecosystem. And 2 of its largest NFTs, those dApps, they actually left Solana and they went to Ethereum, Polygon. So this is a clear negative from the FTX failure. And here's an example how total value lock went down sharply. I mean, even more than other blockchain projects. And not only did the TVL go down sharply because of systemic risk, and by here I'm talking about the failure of Terra Luna that occurred in June, July, or May and June, I should say. But you can see that there was also idiosyncratic risk or unique risk that occurred when FTX failed in June. And you can see on the chart here that there was a sharp decline in total value locked in November. And here, this is from Delphi Digital. It shows you that there was a sharp drop in basically the daily instructions used by Solana for DeFi versus NFT. So basically what they're saying is that NFTs, as they're highlighting here, they're carrying an ecosystem. And I would agree with that 110%. Now here's another example how the Solana's original ecosystem was DeFi heavy. And this chart here is from 2021. I purposely picked this one because you could see 2 years ago, almost 2 years ago, on the left here, that there were many dApps on DeFi and not as many in NFTs. So I would argue now, if you updated this, there would be more of an emphasis on infrastructure and NFTs and maybe tools and things like that versus DeFi. And here we have a chart that shows Dapp Diversity, which is high for Solana. I would say Solana is number one. And here it's number three because of Polygon. It's rated number two. I would say that Polygon is attached at the hip of Ethereum, so I'm not sure if we should look at it as a separate entity, right? Because theoretically, all the DeFi apps from Ethereum could be used on Polygon, so it's a little duplicitous. What else did I want to tell you about? It's also interesting that you can see Avalanche and Cardano are coming up there. They have quite a few apps, so that's important to watch. And funding, I mentioned this already, and this is from Coin Bureau, Token Insights, and Crunchbase. You can see that Solana had huge amount of funding in 2018, but they lost a lot of it because of the FTX scandal. What else did I want to point out? That's about it. They did make a statement, I should say, on Twitter. They made a statement during the aftermath of the FTX failure, Solana, Totally, I should say, Yakovenko did make a statement that Solana has 30 months of funding left. And plus, they've got $600 million of seed funding related to Solana's hackathon. So they're not in bad shape, but just that they're not the largest funded project anymore. So they're still okay. So there's no need to worry about them going bust or anything like that. Next slide. Developers. I can't attain the latest data from Electric Capital on this. I just looked it up now. For some reason, they don't have the May data out, but I'm sure it's still very good. So basically, I think they're the number one rated chain, or maybe number two, when it comes to growth, 2-year growth of full-time developers. So even though they've lost some growth in 2023, I wouldn't worry about developers because everyone is losing developers. So remember, this is crypto winter, so I wouldn't worry too much about it. You should worry if they have 50% decline in developers, which they don't have. So they still have a lot of developers. So I think they're doing really well. And they're using Rust, I should say, programming language, which is considered the most beloved language by coders. It is difficult, but it is one of the best programming languages out there. Ranking, I would say Solana's rated number 8. I tend to take out the stable coins. If you include stable coins, they're rated number 10. And as we speak, they have about $6 billion, give or take, in market cap. And below here in the chart, the table, you can see the trading pairs for centralized exchanges. The roadmap, what I don't like about them is they don't have a formal roadmap, and they haven't done a good job historically on keeping up with their roadmap. So they just got rid of it. But they do provide regular updates on their blog. The blockchain Trilemma, I would say that they're very scalable and decentralized. That's why I've got the logo here to the right. Remember, they've had a lot of hacks, right? A lot of, I should say that chain has gone off many times, has been offline. That's why I wouldn't put them towards the right by security, but they're going to have a new client software, Validator client software. So when they do, I think this icon here is going to move from where it is now towards the middle and be more balanced and maybe perhaps meet the blockchain trilemma. So next slide. Blockchain performance is excellent. And of course, just take this with a grain of, not a grain of salt, but just a grain of salt, but just be aware that every third-party provider has a different number for TPS, transactions per second, for finality. Everyone has something different. So what you have to do is just rate it relatively. So on a relative basis, compared to other chains, Solana is a very fast chain and has good finality, time to finality. What else do I want to talk to you about? Of course, there's voting versus non-voting. I think we all know about that. If we exclude non-voting, all chains are going to be slower than if you include voting. And the speed constraint for Solana is very specific. It's very dependent on fast hardware and lots of storage. So it's dependent on Moore's law, if you know that one. That comes from Gordon Moore. He worked at Intel. And this basically talks about how the price of semiconductors goes down quickly as the hardware performance improves. So Solana, compared to other chains, is more dependent on that. And here we're going to talk about the key performance indicator for Solana. Indicators, that's plural, I should say. I'm only going to pick a few points. You can print this out yourself from Messard. This is the state of Solana. And I'm just gonna, like I said, you can print this out yourself, the slide or the whole book from Messari that talks about this. I'm just going to pick a few points. Staking has been very high. That's the first arrow right here. You can see it was nearly 79% in last year in 2022, and now it's gone down to 71, but it's still high. And you can see Validator has gone up dramatically, and even the 2022 number is high at 1,653. That's a very high number for the Validators. And even though it's been high, it's been going higher. And the Nakamoto coefficient, which was high at 20 last year, has gone up to about 31. What should I talk about here? Just you can focus on a lot here, but for now, I want to focus on NFTs. Just be aware there's a lot to talk about NFTs. You can look at total NFTs, secondary sales volume, unique buyers, and unique sellers. And I'm telling you this because when third-party companies talk about NFTs, sometimes they're saying Solana's growing, sometimes they say it's declining. You have to be very specific on what you're looking at. So just be aware of that. So what I want to focus on is on total new NFTs, meaning NFT mints was actually up 11.8% in the first quarter. So that's a good thing, considering that over the last year, NFTs have been declining. And then you can look at the other data yourself on unique buyers and selling. So again, remember, it's all relative too. Even though, as I said, NFTs have been declining, this has been an industry-wide occurrence. But on a relative basis, Solana has been doing much better in terms of NFTs. And here, and this is something on technologies. We're not going to talk too much on technology on this deep dive. I just want you to be aware that there are many, many different technologies. If you look at the Solana white paper, there's multiple technologies. And if you look at the security audit that was conducted in 2019, this third-party auditor, they rated all these different technologies for Solana in terms of whether there were pioneers, disruptors, and that's the left side. That's the black table on the left. And the one that people usually talk about is proof of history. So you can see there's a lot more than proof of history, right? There's pipelining, turbine, it goes on and on. And on the right side, what they attempted to do was to figure out where it should be mapped in terms of the blockchain trilemma. And they put most of them in the middle. With hindsight, I would have said that's a mistake because there were a lot of hacks, and Solana was offline a lot in 2022. But remember, this audit was before that. So with hindsight bias, I would have said that maybe these innovations should have been more to the right because of all the hacking that went on. Again, you can print this out because there's a lot of technologies and innovations, which I'm going to talk about in my other presentation and in the slides going forward. So I'll just pick one or two that maybe I won't talk about too much in this presentation. You know what? Let's just focus on monolithic design because I don't talk about that anywhere else. So there's monolithic and there's modular. So monolithic is basically one design. Maybe that's a good one. Maybe I should read it to you. It's basically where all the transaction execution and consensus is on one chain. And then you have modular. So modular could be layer twos, or it could also be sharding. Chains like Near protocol and Harmony and Avalanche that use sharding. So those are handled separately. So there's positives, pros and cons for each type. So the positive use of modular is that you can make the chain go much faster by sharding. So for example, if your TPS is 1,000 per shard, and if you got 10 shards, it's 10 times 1,000. So that's how you can increase the speed, right? So what if you have 10,000 TPS per shard? It's 10 times 10,000. It's 100,000. So you can see you can get much faster. But then there's also some big negatives when you're using modular chain. So just don't think that it's all positive. So just be careful there. One good thing that theoretically, even though Solana is a monolithic chain, and they've had a lot of hacking and it's been offline a lot. Theoretically, it's actually more secure than like modular chains that use sharding or even layer 2 chains, because those transactions have to be moved to Ethereum, for example, in Polygon's case, to be finalized. So just be aware of that. So we're going to talk about this later. But when Solana installs its second or third validator client software, it will be more secured. And then you're going to see the benefit of its monolithic design. So I know that's a lot to take in, but just be aware that monolithic designs are actually in some ways better because they're simpler in some ways. And the big negative for monolithic designs like Solana is that they're slow. But in this case, Solana is a fast chain, so we don't need to worry about that negative of its design. So I know it's complicated. Let's go on to the next slide. Here's an example how Solana has been offline many times. And the biggest offlines, and you can see in red, and that was the worst. When they're off for 1 day or more than 15 hours, I think it's 15 hours plus, it turns red. Those blocks are red. So when it's offline, you could see it's red or yellow or orange. So 2022 was the worst. Basically, That's occurred in January and February 2022. But if you look at May and even in June, there have been no instances of the chain being offline. So they were already started improving. And here you can see the stake in operation parameters. And you can see that the requirements, and I've got arrows here. I'm not going to talk about the whole thing. I'm just going to talk about the requirements, especially for the CPU, for the microprocessor. And I mentioned this before that I said hardware requirements. You need good hardware and fast hardware. And that's why you can see there's a high CPU mark of 39,312 for the processing. So you need to have fast computers, and you need a lot of storage. And maybe you could use other blockchains for storage, like Arweave or Filecoin. But basically, there's a lot of hardware storage, which has a lot of there's a lot to talk about here. For example, it gets expensive, and the storage requirements, and also there's a dependency on the success of Moore's law. So there's a lot going on here. And some argue there was an argument basically that there's a tendency for Solana not to be decentralized because it's very expensive for these validators. So if it costs a lot of money to be a validator, you're not going to have mom and pops being validators. You're going to have big corporation validating. But I disagree with that because Solana's done a great job at decentralizing its chain. And I showed you examples with the Nakamoto coefficient going up and with the validators going up over time. And I'm going to show you some more slides right now showing you how it is decentralized. And here we go. So there's diversity of validators by hosting provider. And you can see that Solana is less reliant on Amazon Web Services, AWS, as a single provider. So there you go. And the failure of 3 providers would be needed to reach the 33% stake threshold where there's control. And you could see on the chart yourself, you can print it yourself, but you can see Solana is more decentralized compared to some other projects that I'm showing you here. And here's diversity by geography. So Solana is somewhat diverse, but not very diverse. So here I would actually rate Solana as being less geographically diverse. So this is a negative for Solana, but they're working on making it more diverse. And you can see there's more exposure to North America and Europe. This also has to do with where the developers are, where the Solana Foundation is, where the Solana Labs is, which is San Francisco. This depends on the flavor of the chain, for example. Like Cardano does a lot of business in Africa. That's why you could see that they're more diversified, for example. Let's see. Here was an example of where it shows that there's negative growth for Solana's NFTs, but I said you have to be very careful what you're looking at. Here, they're just looking at unique buyers. And the other point I wanted to talk to you about, you can see the number 2 right after Ethereum. So that's a big achievement. So I think that Solana in the future is going to be a dominant NFT player. And this is because of what's called DePIN, decentralized infrastructure. Oh, a very big innovation for Solana is a Solana phone. And you can see the orders are going up quite steadily. So we're nearing 10,000 orders. And I think they're looking for 13,000 to be a success rate for them. I think before the end of this year, we're going to be at least at 13,000 orders for the Solana Saga phone. It's about $1,000. It's expensive, but it's a very, very interesting innovation. It's going to allow for a wider adoption of crypto by people that like you and me. It'll be more consumer friendly because they're going to be they have the seed vault basically, which is going to be a cold wallet in the Saga phone. Tokenomics, here's a good example. We get very big positives and big negatives. So there's no maximum supply, negative. There's high initial inflation, negative. But on the positive side, inflation is going to be going down. Inflation also is going to be going lower because 50% of the transaction fees are going to be burnt. On the negative side, point number 4, we got a lot of whales. I'm going to show you a slide on that later. The vesting schedule was terrible, but now it's good. And Alameda has a $45 million stash of Solana coins that's going to be sold when the bankruptcy restructuring is done. Who knows when, next year or the year after. And here's the slide I want to talk to you about, where there is a big negative where 48% of the coins in the top right here in pink, you can see that Solana has a lot of whales if you compare to other blockchain. You could see Basari did a good job at comparing the concentration of initial coin allocations. So Solana, I guess, is number 1. That's pretty big. No, Flow is number 1. Flow is Dapp Labs, by the way. That's very centrally controlled. And Internet Computer, I believe, is also somewhat controlled, and Avalanche too. So, but you could see Solana definitely has whale risk. And here, I mentioned this before, inflation is high, but it's coming down quickly. I believe we're at going towards year 3. This is from the initial white paper, by the way. And Tokenomics, this is from Missouri, and you can see that they're talking about inflation here, that they're talking about BNB having the lowest inflation, and we could see that BNB may have low inflation, but have other problems, right? SEC lawsuit. And you can see here that Solana initially had high inflation like Avalanche and Coinbase. I'm not Avalanche and Polkadot, I should say. And here, Solana had a very, very aggressive vesting schedule, but don't worry, that vesting schedule is now complete. There's nothing to worry about. The only area we're going to see a rise in tokens being created is from fees, but those are going to be burnt. Half of those are going to be burnt anyway, so I wouldn't worry too much about that. External ratings. No one talks about this, but it's important to see what others are rating Solana. This is almost like doing a credit rating. I used to be a credit analyst, and I used to rate corporation. I would rate corporate debt, and I would also look at what Fitch, D&B, and S&P and Moody's were doing. This is the same thing. So if you look at Economy, they have a high rating for Solana. Symmetry has a pretty low rating, and some of these ratings are stale. And Crypto EQ, which is what I have right here, has a bronze rating. So that's the 3rd highest rating for Solana. And Token Insight used to have a very high rating of AA, but they dramatically lowered the rating to BB, from AA to BB, because of the FTX scandal. My guess is that now that the aftermath of that has occurred, I think Token Insight's probably going to review them again and raise their rating. And you can see the pros and cons I mentioned here. I'm not going to read them to you. Social engagement, from any way you look at it, I think the social engagement of Solana, and it's not just Twitter, it's Reddit, it's the number of people that are watching Solana on Seeking Alpha, on CoinMarketCap, Any way you look at it, social engagement is very high for Solana. So I would say this is one of its best attributes. Next slide. Here we've got another way of looking at social engagement. We're looking at the cumulative increase in wallets. And I like that you could see that despite the crypto winter, wallets are still going up, and especially recently. And this is not easy to measure because we've got a lot going on here, which I didn't talk about, like we've got some wallets from Helium and Render that have moved that may be affecting this chart, but sometimes they're on, sometimes they're captured by data providers, sometimes they're not. And this includes total value locked. I think I'm going to talk about that later on, but I just want to tell you that there is a good trend. Whether or not they're captured, you can see from this chart here from Doing Analytics that there's been a nice steady increase in wallets. Next, valuation. People usually don't talk about valuation, including myself, because it's a little early because the chains don't have that much business. But I do want to point out that number one, if you're going to attempt to value Solana, you should value it against similar chains. That means layer 0, like Cosmos and Avalanche, layer 1s like Aptos, and layer 2s like Polygon. And here you can see that Solana looks expensive if you're looking at total value locked versus market cap. But it's cheap if you're looking at daily transactions or daily commits. And I highlighted those for you in yellow. You could see, for example, I'm just going to point out one of them. If you look at the last row, market cap divided by daily transactions is only 0.4. So that's very, very low. So it shows you that they're undervalued if the kind of person that likes to look at valuation metrics. Again, I still think it's a bit early for this. I did another presentation. You can look at it down there that looks at price to book. Now, I think in a bear market, it's very important to look at that. And if you look at price to book, Solana is priced in the middle. The cheapest chain out there, by the way, is Near Protocol Labs. It has the lowest price to book. Next, technical analysis. I still think we're in the crypto winter. Everyone says that we bottomed in around the period between, I guess, October and December. And there was a lot of evidence, including convincing evidence, that Bitcoin and crypto bottomed at that period of time. But I'm not convinced yet. I think we're going to get some more what you call Bitcoin dominance and altcoin bleed. So just be careful out there. And you see this happening now because regulators, including the SEC, is doing enforcement. It's doing regulation via enforcement. And they're suing everybody, including Coinbase and Binance, and the list goes on and on. There's been like 52 lawsuits over the last year or two. It's insane. So because of that, there's been a movement to Bitcoin. And by the way, there's probably going to be some more regulatory movement when it comes to stable coins. So just, put on your seatbelts. So this is why you're going to see more Bitcoin dominance and people moving out of Solana, for example, and other altcoins. Also, because of the lawsuits where the SEC pinpointed and specifically chose some projects like Solana and Cardano, they chose them as being securities. And because of that, these coins are being constantly delisted from centralized trading platforms. So because of that delisting that's going on, you may see more selling of Solana. So risks, as I mentioned earlier, you've got systemic risk. Systemic risk means if the stock market goes down, because crypto and even Bitcoin is correlated with the stock market, it can continue to decline if the stock market goes down. And then there's liquidity risk, meaning if liquidity gets tight, which I think it will, all risk assets are going to get hurt. And then there's idiosyncratic risks. These are unique risks. There's venture capital risk, which I mentioned before, FTX. There's regulatory risks. And regulatory risk could be systemic, meaning tighter regulation, but it could also be idiosyncratic, where the SEC specifically sues a project. And then there's reputation risk. For example, Solana has a bad reputation of being offline a lot. There's also business risk because there's new layer one chains called Solana killers, like Aptos and Sui. And then there's execution risk. The biggest execution risk, in my opinion, is going to be the installation of the new validator software. And this is going to be occurring quite soon. And then there's market risk, and that could occur from a few areas. One area is Solana has a lot of their treasury in coins. And so if the coins move around up and down, that's a market risk. And there's also a risk in terms of Dapp tokens. We'll talk about that later. But basically, if the Solana blockchain owns tokens of dApps, the movement of those tokens is called a market risk. And then lastly, there's counterparty risk, and that's custodial risk and banking risk. So, for example, I'm trying to remember now, Solana, for example, may have stable coins or US dollar or money market funds. And those money market funds may be in a custodial bank, or they might be in a bank like First Republic that failed, right? So there's counterparty risk. So there's a lot to talk about. There's a lot of risks here. So just be aware of all these risks. And remember, a lot of these risks are systemic risks, not just unique risks for Solana. So lastly, despite all those risks, I give 2 thumbs up for Solana. I on a relative basis, I rate Solana pretty highly. But I think you should use a DCA strategy. Use a dollar cost averaging strategy, because I still think we're in a crypto winter and Solana's very susceptible to altcoin bleeding, especially since the SEC is suing everybody, and they may actually sue Solana. So just be careful out there. And last but not least, I want to say that if Facebook could move fast and break things, a reborn Solana could certainly eat glass. Good luck, everyone, and thanks for listening to this long presentation. Bye-bye.